All right, we actually want to welcome in Ginny Horn, co-host of NextGen and markets correspondent, to talk us through a little bit of the setup for today and dive into a couple of our morning movers. Ginny, it's good to see you this morning. So we begin the day where markets are under pressure once again, whether we're talking about equities or the bond market, oil prices shooting higher right now. Interestingly enough, you have actually gold ticking higher, which gold had been more mirroring risk assets recently. But I want to get into kind of the price action for equities today. It just feels like it's going to be another downbeat day full of headline risk. Your thoughts?
I know, and frankly, I do feel like we became really accustomed to, some of like the pre-market weakness being, really bought up by the bulls and in the obviously tech trade that was driving overall enthusiasm for the markets for so long. That sort of has died down a bit, where oftentimes it does feel like when we're poised for a lower open here, we're not really seeing any sort of revival in these overall markets, at least on a session-by-session basis. So, pointing to a lower open this morning, no doubt. Oil, you mentioned, of course, crude oil prices still rising as we have gone through the sort of back and forth all week long, digesting what the time frame looks like for the war in Iran, of course. And so this does come after now officially we've seen the Nasdaq Composite slip into correction territory, of course, marking a 10% then decline from the record set back in October. The Dow is also now nearing correction territory, down almost 9% from its all-time high. S&P has fared more modestly, down about 7%. And so President Donald Trump did extend a deadline to attack Iran's energy infrastructure, saying he would extend a pause to attack those energy facilities in Iran to April 6th, which is a little over a week after the original deadline that had been set to end Friday. And so this is, per to Truth Social post, Trump did say that per the Iranian government request, please let the statement serve as a representation that he is pausing this period of energy plant destruction, and that talks are ongoing. And despite some of the statements from various media outlets, he did say that they are going very well. So this is the latest signal that the Trump administration is seeking an end to the U.S.-Iran war, which is right now, of course, hurt on, overall oil prices. Also been a major weak spot for the entire cryptocurrency asset class. But I will say that looking at some of the interesting price activity today, volatility a bit more elevated than yesterday as we are nearing that 3 handle here, and the dollar also higher, and gold, as you mentioned, another standout in reaction of about 0.8%. And so a resolution I do think is definitely sought out by these markets, but every day it's like we digest how much longer that this could go on, and that's sort of what we see now is this tug of war back and forth, but today obviously tugging a bit more to the downside, Diane.
Yeah, indeed. And then, I'm glad you mentioned volatility with the VIX sitting above 29 right now. So we've got volatility elevated today. And then the pattern recently has been investors taking off risk heading into the weekend, because why would you want to go risk on when there's still uncertainty in front of us? Because, by this weekend, we'll be hitting 30 days with the war with Iran. And I know that's a key point to think about, especially when the other original indications from the president were that this would be a 4 to 5 week war. So we'll see if we, end up coming to that timeline, because now we're kicking things into April. Let's talk about a mover that you're across. Unity, those shares soaring this morning, up double digits. Walk us through some of your takeaways here.
And so right now, this would obviously be subject to regulatory scrutiny. Both companies have recently announced restructuring plans, including like job cuts recently at Brown-Forman, and cash-strapped and health-conscious drinkers in the U.S. have also been driving huge, volume declines over the last several years. And so right now, again, we are seeing some emerging threats to competitive natures of this industry, and a potential merger could result in some of these significant operational synergies. But also there's still a degree of, I think, macro uncertainty, just given consumers' health habits and obviously choices to consume less alcohol on an even global basis, but also the fact that it has been a very different environment post that really boom we saw during the pandemic. And so still reeling a bit from that. But you could argue both of these companies would be getting a better deal, because frankly, both of them have shed a bit off their market caps in the last several years.